Hello and welcome to Business Incorporated. Thank you for joining us. I'm Chimezie Obi Iwagu. On today's program, Zambia's central bank opposes bid to remove oversight of public debt. Ivory Coast and Ghana look to regulate cocoa industry sustainability schemes. Plus, Zimbabwe holds diamond auction for 316,000 carats. Let's get the show started now with the markets. And the Nigerian stock market appears to be sustaining the positive momentum recorded on Wednesday, with the all-share index up 0.19% at intraday. The market posted its largest single-day gain since in close to a month at the end of yesterday's session. In South Africa, the JSE index was also doing good at intraday with a 1.32% increase. Meanwhile, South Africa's market regulator has fined retailers turnoff a record 53 million rand, or about $3.6 million, for making false, misleading or deceptive statements to the market. Steinhoff disclosed the whole in its account in December 2017, which shocked investors and wiped more than 200 billion rand off its stock market value. In Egypt, the index was also 0.64% positive at intraday, while the Kenyan bourse closed Wednesday's session 0.30% upbeat. It was a mixed bag of numbers coming from the Middle East, where the Abu Dhabi index was down 0.2% at intraday, dragged by market heavyweight First Abu Dhabi Bank, which edged down 0.4%, and Abu Dhabi Commercial Bank, which lost 1.7%. Dubai's index was up 0.21%. Qatar's index fell 0.05% at intraday, while Saudi Arabian stocks was on course to snap out of an 8-month low hit in the last session with a marginal 0.02% increase. In Europe, stocks traded slightly higher in the morning as investors look ahead to an anticipated announcement of easing measures from the European Central Bank, while trade tensions between the US and China showed signs of thawing. Conrad has all the details and joins us now from the Frankfurt Stock Exchange. Hello, Conrad. Good afternoon.
Good afternoon, Chimi. I just have the statement from the central bank here. It looks, I hope you can see it, it looks very messy, but I hope that I will be able to make sense of it for you and your viewers.
Please go ahead. Tell us, what are they saying? What is Mario Draghi saying?
Well, the central bank just came with its latest interest rate decision. It just sent it over the ticker, and some of it had been anticipated by the markets, like the even lower negative deposit rate. That's the rate that banks have to pay to the European Central Bank when they put money on a bank account. Up until today, they had to pay minus 0.4%. Now, this is now even lower, minus 0.5%. That's, of course, a measure that the ECB has introduced in order to force the banks to give out loans instead of parking it at their accounts at the ECB. To soften this a little bit, the ECB also has announced that it will introduce what's called a two-tier system, which means that parts of the bank's holdings at the ECB will be exempt from this negative deposit rate. That is, of course, positive news for many of the banks who are suffering under this negative rate. Now comes the big surprise of this day. Not only has the ECB announced that it will restart its bond purchases, it will actually start it on November 1st. Quantitative easing, 20 billion euros worth of bonds will be purchased each month starting November, and that's a big surprise for a majority, at least, of people here on the trading floors I talked to before. They had said, well, Mario Draghi might be talking about restarting quantitative easing, but that the ECB is actually doing it, that's a big surprise. And look at that. Look at the German share index DAX. It plunged immediately after the decision came out. Then it rebounded. It's now slightly higher, but what looks like a little flag is actually, I think, worth to be interpreted as cluelessness on the market. What should we make of such a bold move from the ECB? What does the ECB know that we don't know? Why do the markets, why does the economy really need such a bold monetary policy now? That's a big question.
Well, in this very moment in Frankfurt, Mario Draghi's press conference is about to start. What will he likely to say to defend his policy?
Well, he will likely defend the fact that the European Central Bank is really fixated on this 2% consumer price inflation target. Remember, the European Central Bank's target is to maintain price stability in the euro area. And price stability, the European Central Bank itself has defined, is a consumer price inflation rate of 2% or slightly below that. I have to say that is a level that is being questioned by more and more economists in the Eurozone, and not only by German economists. Many of those are, traditionally very critical of the monetary policy of the central bank, the very generous monetary policy. No, more and more economists question whether the 2% target is not too high. I mean, the ECB should fight deflation, that's lower consumer prices, but at a consumer price inflation rate of between 1 and 1.5% in the Eurozone, shouldn't the ECB be happy? That's a big question, and Draghi will have to defend that. Another thing that he is likely to be questioned at the press conference is what kind of legacy he will leave his successor, Christine Lagarde, who will take the job on the 1st of November. Of course, on the exchanges, on the markets, many people are now discussing what can she do when she comes into office? Can she even lower rates further into negative territory? That would, be a big sign that the Eurozone's economy is really in crisis.
All right, away from ECB and interest rate setting, the German Chancellor Angela Merkel is also in Frankfurt today. That's at the International Motor Show. What's her message for the car makers and for consumers?
I think she had a bit of a surprising message because remember we had the Dieselgate scandal here in Germany where the Volkswagen had cheated about the diesel emissions. And during that scandal, government officials, including Chancellor Merkel, had been very, very critical of the car makers, saying that, it was the car makers' fault and that they should really pay for it. Now, today at the auto show, Merkel said that the government, the state here in Germany and the auto industry should work closer together again. And she mentioned the reason, the huge challenges of climate change. She said that was a Herculean task, so something worth a Hercules, a very strong half-god, would find it difficult to solve this problem. Now, she says the only way to tackle this would be to have a cooperation of the state and of the industry, which is, of course, positive news for the car industry here. I think what's also worth mentioning is a short event that happened while Merkel went over the auto show here in Frankfurt and checked out all the new chic models. Greenpeace staged a surprising protest with, huge transparency where, of course, they were protesting against the car industry. A young protester yelled, Mrs. Merkel, don't believe the lies of the car industry, which was, of course, great for the media, lots of photo ops there. But Merkel more or less ignored the protesters and went on to check out the BMWs and the Mercedes that you can see at the motor show here.
Well, that's the ups and downs in being a leader anyway. Thank you for those updates, Conrad.